This is Martin from Secret, the channel for learning about trading and investing. Welcome to quick market analysis for March 24th, Friday, tomorrow, 2023. So let's dive into the charts. Here we have the daily charts of the Nifty. To the candle, it looks like a gravestone doji. It's a doji. It's a small body. It's a reversal wick. It shows the selling pressure from the wick size, right? And it came closer to the resistance zone at between 200 and 300 that zones, and then it's the same place where Nifty was unable to move up since the last several days, right? This candle, so it is probably third or fifth attempt to take out that 18200. That's what's happening. And Banknifty, this is the charts. It's a hammer. It's a wick reversal. It has a little percentage of wick size on the downside as well. It's a reversal wick. Probably there is a chance of reversing from the upcoming trend from here down. So the mechanistic pattern is showing a bearish bias because of the fact that it's a reversal wick, and the selling pressure from the doji on the Nifty is very much evident. And look at the levels where we are. Right, we have huge resistance of this is the 20 moving average, 200 moving average. No, both of this confluence. This is 50 and the 100 on the confluence and the channel top, and we're down here, unable to even move above this. Right, ideally, if it is falling down back to make a new low, it's a little too early, I would say. Right, I would have expected it to move at least above the 200 EMA or near this 17500 zone, and then make another swing journey downside. But it's pretty early. Even the Banknifty, which is much stronger than Nifty, since it is above the 200 EMA, also fell and hit exactly the 20 EMA exponential moving average, and then is showing a selling pressure and then tendency to move further down. That also a little bit early. It should have ideally gone closer to the 23 Fibonacci retracement or the previous breakout zones or the top of this swing wedge, and then move down. Actually, it has moved only 2% or only 4% in the Banknifty and 2% after making a 5 or 6% of down move. So it's pretty early, but looks like the selling pressure is taking it down further. Right, let's see what's in favor of the gains. That gave the gains today, all the gains of yesterday, and 2-3 days of gains is all given up and closed red again. The previous 2 days closed below that it has closed today. So we know that it's at 11 and 12.4% of subtle pullback has happened, and it's a downtrending journey last 3 months. And then this doji in the small bodies and reversal wicks and inverted hammer, all these indications that there is selling pressure on the top. Right, inverted hammers, small bodies, indecisiveness, and all this tells us that it's not that easy to move further. If you still below the 200 EMA, or the Banknifty is above that, right? So that's also a bad thing. A negative thing, something is bad. Bollinger Bands, it's a bearish expansion. It seems to have halted yesterday, but that's not the case. And Bollinger Bands expansion is continuing in both indices. Bearish, momentum is bearish, already in the negative zones. But the Banknifty remains in the sideways zones after climb back. It is not still fallen. That's so momentum wise also Banknifty has some edge. And trend is still in the negative zones. There is some strength, weakening of the bearishness is there, but still it's in negative zones with both indices. Lower and lower high is what is happening in the small short term, right? And that's what is going on. So unless you breach that pattern, you're still bearish. US index after the Fed rate decision has come out, but it was dovish, but it doesn't seem to have influenced the market, the equity market, to move further up yet as of now. It's still in the descending wedge and having selling pressure, and it's a crucial resistance zone, and it's more indicative of a going downside. So FS are aggressively selling at 9. Yesterday they halted for buying some 60 crores, and today they started selling again by nearly 950 crores, selling the cash once again. So absolutely no support from the Fyers side is why the market cannot move further up. It's pure spilling pressure from the Fyers. IT sector is bearish, completely bearish, and unable to move up because of the banking crisis. That BFSI sector of the IT backed on that, and because that it's a sector that remains the response. Now rupee is remaining weaker, although some pullback in dollar has happened, and the it was again a little bit today, but overall it's still take above 82. So it's not great to be having that for several months now, probably so more than a year. So what's in favor of the bulls? Few things are still in favor. The first one is that it's a very close to 17, 16, 750, 650 is a very close support zones, right? And that is a place where previous previous resistance zone can act as support, and then bounce, change in variety bounce can happen. So it's a major crucial support. A breach of that would be more falls on downside, more deeper cuts, right? But so that probability still remains in favor of the bulls. Nifty is holding the 17K despite the fall today selling pressure now. That Nifty holds the 17K, it's not ready to go down that, right? So Banknifty also survives and holds the 200 DMA support, so that's also positive. Weekly charts, we're still in the higher high and higher low pattern, and the price action higher high higher low is still maintained on the weekly charts of unless and until Nifty breaches that's 16,750. We're still okay, right? Only in the lower time frames we have the lower high pattern. Otherwise we are higher high itself in the medium term. Crude oil is less than 70, just still fine, spiked up at less than 70. Banknifty still maintains sideways, that is also positive, and has more strength. From the OI perspective, OI we are not considering because active spelling, active positions on the open interest will be coming in for the next week expiry from tomorrow onwards. But today's, it was bearish. Comparatively, Banknifty has more strength, and the bearishness ADX indicator also indicates that there is a weakening in the strength, both indices, Banknifty particular. So that's slightly positive, you can say. Auto, they remain, except the IT and the auto just fallen down. Others are maintaining the momentum in the sideways zones. Heavyweights are also maintaining the momentum in the sideways zone. Not everything has fallen down to the bearish zones yet. It has climbed back, some because coming back. Only few sectors remain in this bearish. So that's again positive. And India VIX didn't rise much today. Actually, it's cooled off. Even the market was falling, it didn't spike much, and it has cooled off a little bit. So which is again a positive in favor of the bulls. So what next? So today what happened was a clear selling pressure from the big sides levels clear, and we could not retain the gains. Market could not retain the gains, despite the fact that the Fed event went okay as expected, as per the estimates, but it didn't help, and neither did it help the US markets as well. So we are probably going back to support is what is indicative of the candle patterns. All the it's indecisive doji, and it's a gravestone doji that looks like a Nifty and a hammer inverter on the top of a trending up move. Could be short-term reversal indicative of that, but it all depends if it is going below the candle's low. So the reverse bias remains. We hardly have moved 2 to 4%, 2% in Nifty and 4% in indices. After having fallen 5 to 7.5%, 5.5% and 7.5% of pullback has happened after that. We moved upside only 2 to 4% on the indices, but too early to fall down. So there's some hope out there, but ideally should have had a relief rally that could have taken it some more before it had fallen down. But there seems to be happening. We'll have to see what can it turn on the weekly charts from tomorrow. So if the global markets are showing some recovery, then probably that may bring some cheer, bring in some cheer on our markets. So as of now, it's all the global Fed rates, recession fears, and all that is impacting. Right, so uncertainty is still there. The VIX is cooled down, but it is not ready to go back to the 11 or 10 that concerns. So that means some uncertainties remain there. Recession fears, COVID worries also has come in now recently. So I'll be cautious and then have safe position. So downside you have 17,250 and 17,500. No, upside 17,250 and 17,500 which has to be tackled, and then so downside 16,750 and 16,650. Right, Banknifty similarly upside 40,000 and 40,000, 41,000 and 42,000. That's how it goes. Resistance and upside and downside. Next swing low would be 37,386, which is quite far from the 39 kind of levels that we have. So actually there also level wise also it's stronger as long as it makes demo 20 DMA. So there is selling pressure. There is candlesticks are not great looking. Indecision is there. All the momentum trend and all the indicators are bearish. Yeah. So the only hope is that we don't. Hope for the bulls is that we don't breach the support zone. So if it breaches, then we may be trending down for long, right? Because the medium charts also would turn out to be bearish at that time. So keep a close watch on that. Keep a close watch on the US markets. So always hedge your positions, and then position size if less properly, cut short your position size if in case this week spikes above only 20 once again. So stay safe, and stay invested, and we can use this downfall if it all happens as as investing points where you can use option strategies to invest. Also check out the playlist for the option strategies, trading option strategies, investment strategies, and all that. So you can do that, but in small chunks, not in one shot. Don't lose everything when market falls a little, right? Because it can pull back, and or it can fall down further down, much more down, and then you don't benefit. So that's it. Hedge your positions always. Don't have naked positions. Position size properly. Manage your risk. Small loss and big profits is what you're targeting for. Consistently. Right. That's my view for the next day. Bearishness continues and indecisiveness is there. Levels we already discussed on both the indices. Keep a note of this. And if you subscribe, listen. If you're watching, please like if you like it, and comment and share feedback and share it to others, please. And we have very few subscriptions. If you're not subscribed, please subscribe right away and share it to others. I appreciate the help. This a lot. And if you're interested in the Telegram services, check out the description. You can avail that as well. So that's it from my side. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.